Hello everyone, this is Jay, and today we're going to be reviewing both my dividend and my growth portfolio. But spoiler alert, I did not make any purchases into the growth portfolio. And if you missed Friday's video, this is due to I needed to pay off my credit card. I had around $250 left from the car parts that I bought these past few weeks as I was working on my wife's SUV, and I'm finally paid off and no interest was charged, which is awesome. So now I'm gonna be able to make a deposit again next week into the growth portfolio. And let's go right into the updates tab, because I did make a few purchases into the dividend portfolio, which it was 5 purchases as you can see right here. And of course I started with $25 into SCHD at a share price of $83.34. I remember when I was buying SCHD at $69, $68, which is crazy. And of course, I have that thinking, right, that we all get every time a stock or an ETF that we hold goes up in share price, we're like, why didn't I buy more, right? But I am patient. I am buying slowly, one cup of coffee at a time, right? Because that's how I have been growing this dividend portfolio. And I'm going to show you at a what market value is at right now in a few minutes. But if you see, the next purchase was VYM, which is another one going up in share price. I put $20 this week. Share price was at $125.50. I remember when I first started buying VYM, it was like around $101, $100 flat. And it even went down to like $99, which is crazy. But then S&P 500 index fund, FXAIX, only $10. Share price was at $196. I've been growing this one 2 cup of coffees at a time, $10 every week. And some of you might be like, oh my gosh, Jay, you're crazy. That's the S&P 500. You're going to underperform, so and so. Well, I do understand that, right? I do have it in this portfolio to add some growth to it because I want some share price appreciation in some of my positions too, right? I'm not only working on income in this portfolio, but it is mainly on income. But my 401k, about 85-90% of it is in the S&P 500. So I'm okay in that aspect. I'm not in a rush, or I'm not nervous on investing in the S&P as of right now. Then my next one was Pfizer, ticker symbol PFE, $10 at a share price of $28.79. Pfizer is one of my positions in the red right now. So I want to continue growing it. I like their dividend yield. I'm hoping they don't cut it. I'm hoping for that, right? But I'm going to continue buying Pfizer, continue to build up that position, and just hold it long term. See how that dividend performs for me. This one is mainly for income that I'm trying to buy on Pfizer because it's a company that has been in business for over a century, if I'm not mistaken, like over 100 years. So I'm going to continue holding this position right here. And then my next one was Kenvue, a cup of coffee, $5 into a share price at $21.74. I'm going to continue buying Kenvue as of right now, unless it goes up in share price like very high. But I like it right now. I really would love to get to 100 shares of Kenvue, honestly. But because I'm planning on holding long term and hopefully passing it down to my kids, maybe by then, Kenvue is gonna be, I don't know, $150, $200 a share. That's hopefully a very long time from now. But I do believe in Kenvue long term. $69.84 in purchases. And the leftover of the money of the deposit that I made, I'm going to put it right into Visa on the weekly challenge Monday buy, which Visa, if we go into the stock analysis tab, I have it pulled up over here already. It's going to be at around $267 at the opening of Monday, and I'm going to buy it as soon as it opens, because under 270, I definitely want to continue buying Visa. And I wish I had more money to make like an extra deposit, like an extra $5-10 is also okay. I'm not a big money investor, right? But I've been growing my position slowly, DCA into it, dollar cost average. Once I learned that a few years ago, I just started using it, and I've been very motivated, continuing to stay motivated, buying some more shares of my favorite companies. Market cap $508 billion. The earnings per share $9.35. PE ratio at a 28.62, and the forward PE 24.99. Dividend 0.78. $2.08 per share per year, and the analysts are calling this a buy, and I have to agree in this one with the analyst. Now, Visa is due a dividend increase, which is gonna be awesome. I can't wait until they announce it. If we go right here into the dividends tab, as you can see, the payout ratio is only 22%. That's all they use from their free cash flow to pay out this dividend. But look at that dividend growth, 15.5%. And as you can see right here, usually in November, that's when they announce their next dividend. And they should be due a dividend increase in November, which it usually pays out in December 1st, as you can see right here, the first week of December. In December of 2021, they went from 32 cents to 37.5 cents. Then in December of 2022, they went from 37 cents to 45 cents. And then last year in 2023, they went to 52 cents from 45 cents. So I'm expecting a dividend increase from Visa. And Visa is just a very, very good company. In my opinion, of course, look at that revenue growth year over year. In 2022 is when they went crazy to 22%, pretty much 21.5%. But last year, 11.4%, trailing 12 months at 9%. And the operating revenue, look at how it is growing very nicely. This looks like a nice set of stairs right here from 2020, $21.8 billion to trailing 12 months, $34.9 billion. Visa is one that I'm going to continue buying. And if we go back into my portfolio, let's take a look at the market value of my portfolio, which is at $16,400 right now, up in the positive, almost 11% in my positions. And almost all my positions are in the green, which is good. But I also like when they go under my cost, so I can continue buying and dollar cost average right into my positions to continue to bring my cost per share down, right? But this is good. This means that a lot of the companies that I chose are doing good in share price appreciation, right? They might be overvalued right now, some of them, but that means I made some good picks in some of my positions. Visa is one that is in the red right now, but is barely in the red as of right now. I'm only down 30 cents. I'm at 2.76 shares as I was talking about Visa. And my cost per share is at $267.55. So it's very close to the share price that is at right now. And as you can see, my yield on cost on Visa is 0.78%. So let's see where that dividend increase come at. So, and then I'm going to update it right here to see what my new yield on cost will be. So hopefully it's going to be a very nice increase, double-digit percent increase like they have been doing the past few years, which is awesome. I really like my Visa position. I want to continue growing it into my top 5, top 3 positions right up here with All Realty Income, Johnson & Johnson. I want it larger than All Realty Income. I believe in Visa long term. Payments are gonna go cashless, in the future, right? We're gonna be more cashless than cash, right? I do not believe cash is gonna be here maybe in like another 40-50 years. That's just me estimating, right? That's just me, my opinion, without any information. I did not educate myself on it, but I do believe that because it's just many places are just continuing to go cashless. They're just going with card. They don't have any cash in the cash registers. They just take cards and that's pretty much it. So this is one that I'm planning on holding long term. Another one that is going to have a dividend increase soon is going to be Vici. This is one of my favorite real estate positions. And if we go into the stock analysis tab very quickly, Vici is one that, if you see right here, it has a 5.05% dividend yield right now if you pick up any shares right now. The payout ratio, we don't look at that, right? Because this is a REIT, so we got to look at the FFO payout ratio. And then dividend growth, 6.41% in the last year. They have grown their dividends for 6 years. which is awesome too. And if you see right here, right, in September of 2023, they went to from 39 cents a share per quarter to 41 and a half cents a share per quarter. So then now when they announce their dividend now in the next few weeks, which it should be like mid-September, they should be announcing their next dividend. I'm hoping it has a very nice increase. I'm okay with like another 5-6% dividend increase from this REIT since it has such a high yield. But that's gonna boost up my dividend income once again. And this is because the reason why I'm talking a lot about these dividend increases is because MPW, which is my worst position, 63.1 shares, they cut their dividends. So now I'm only getting a 3.44 dividend yield on cost, and my estimated yearly dividend went down to $20. So my estimated yearly dividends total went from over $555 to $542, which is such a bummer. But I knew MPW was not gonna do good. I really had high hopes that they will turn things around. But I've been talking about it for quite some time that I am going to be moving on from this position completely. I don't think I want to hold MPW at all, or I really don't, that's just my decision. My mind is already made. Even if they turn things around, I don't think I want to go through all of this with MPW. I have Vici and All Realty Income, which are more steady companies. They're doing very, very good in the real estate sector. And I like those two. I honestly like those two. I'm just still thinking about the plan so I can save my $284 that I have in market value from $587 invested in this company with dividends reinvested too, because I reinvested the dividends a couple times when they were much higher. And I'm going to try to save some of this money and put it into one of my other positions. But my plan is to Randy, who put a comment on this on MPW in the previous video. I don't want to put this money into Visa. I do want to put it into one of my other high yield positions. So, which I'm going to announce soon. I don't want to spoil the plan yet. But I have been discussing or been thinking about what am I going to do with that money from MPW, with the proceeds from that sale. But I'm not in a rush to sell. If it goes down a little bit more, yes, I'm going to be hurting. But as of right now, I'm going to continue holding until I have my plan already set. And then I'll execute it, right? But as of right now, that is definitely a bummer. And that was really bad. When I made the adjustment yesterday and I went down from $555 a year to $541, I was like, wow. The good thing is that SCHD has such a nice dividend increase this year so far, year over year. And Vici, Visa, hopefully they have very nice increases. Bank of America had an 8% increase not long ago. So that was also another one that was really, really good. And Starbucks is in the positive. That's another position in the positive. I like that nice jump, that 20% jump in share price when they change the CEO. Hopefully a few other companies do that too. But yes, this is the one. And then the portfolio salary went down. I believe it went down the work hour week to 26 cents. And let me go into the growth portfolio. I'm sorry, I almost was gonna cut the video short, but this is my growth portfolio right here. I did not make any purchases, so I'm not gonna go through my purchases. But as you can see, VGT is still my largest position right here. 20% in the positive, FNILX 19%. Google is one that I want to buy some more. I want to buy some more Google. If I would have made a deposit this week, I would have bought more, even though it's over $160 a share. I do want to grow this position some more, and my stop buying price was at 160 flat, but I'm okay with buying some more Google actually, because I'm planning on holding long term anyways. I'm not gonna do any trading into these positions, right? Even though I can do right now, I could get over 15% in gains in these positions, but I'm not doing that right now. I'll sell them later on, right? When I got much nicer gains. But Google is one that I want to buy some more for sure. My cost per share is at $146. That's why I'm up 13% pretty much. I'm gonna make a deposit next week. I'm gonna make a deposit. I'm gonna buy some more of that. Tesla, I'm not buying anymore as of right now. It's over $200. So I'm not buying. I'm not in a rush. 6.6% up in this position. That's gonna be one that I definitely sell for gains later on. But not right now. And then Amazon is another one. A lot of super investors are buying. They have been buying and buying as of lately, and I want to buy some more, even though my cost per share is at $154 as of right now, because my larger purchases they were done at higher prices, like over 160. So, but I do want to buy some more Amazon, especially the they are projecting very nice share price increase. If we go into the forecast right here, they're calling it a strong buy. And as low as $145, they're projecting the next 12 months, right? If it goes to $145, I'll be focusing on Amazon only. I think that's all I'm going to be buying if they go down to $145, honestly. And then the average it is at 218, which is an upside of 23%, and the high $251, which is a change of 41% in share price. I do believe in this one, in the average. I do believe they will go above $200 again, especially over $210. They have been growing very nicely, Amazon. So this is another one that I want to continue growing. I'm just doing it slowly. I'm dollar cost average into my positions. That's what I've been doing. You don't need to be a millionaire to be able to invest in the stock market, right? None of this is financial advice, guys. But always do your research. Look for help if you need. And definitely invest so you can grow your wealth in the future. That's how a lot of people have been doing it, which is, which is really, really good. All right, everyone, please don't forget to hit the like button, subscribe to the channel so we can get to the next goal of 1,000 subscribers, and leave your opinion in the comment section. All right, everyone, I hope you enjoyed this one, and I'll see you in the next one. Thank you. Disclaimer, I'm not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.